Hey everyone, welcome back to my YouTube channel. So today we are going to be doing some market analysis. So I'm really looking for a A plus setup trade right now. So we are gonna really lock down. Not necessarily may not actually take a trade today. I'm not quite sure about that because I haven't taken a look at the market yet. Completely from scratch. I thought we just look for a very good opportunity and I'll just do the analysis to live so that we can get a proper idea about what to do next and what is the next golden trade that we can take. I need 100% win rate trade, like 100%. The next trade that I take, I really want to win and I have to win it. So that is the trade that we'll be looking at. So yeah, so coming right up, this, as you can see right here, this is some analysis that I actually did like a while back. So this trade might play out. I'll probably explain this, but before we step right into this, let's just actually take a glance at all of the forex pairs that we have, so that the currency pairs that we have. So maybe we can first, in a glance, I'll just take a look. What exactly is the best opportunity that we can see. Again, as I said, we are looking for the golden trade, A plus setup, such that 100% we are going to win that trade. So we have to be really patient for that, and we do not make a move unless and until we have actually seen the possibilities and we do proper analysis. We are not just going to trade for the sake of trading like all the losing retail traders, because come on, trust me, only losers do that, right? Only losers take like hundreds of trades every single day, and the next thing you have just blown your account and you're just sitting there regretting your decision and saying, what, next time I'll get it right, next time I'll fix myself. And what happens the next time? You screw up even more, and because you just never have a discipline. And see, I understand, as traders, I have been through this, and I like this is something that I can relate to very much, because not just been through, this is my current journey, like where I'm really struggling with over trading. And by over trading, like not like there was a time when I used to take like 10-20 trades a day. Yes, it has been that bad like 2 years back, but right now I have managed to bring that number down to a large extent. I was actually sticking for the past few months like around 1 or 2 trades maximum per day. I have been going like very good with that. But recently, in the last week or so, I have find myself taking on an average around 3 or 4 trades a day, and it's not even exactly A plus setups. Like one of those trades are like really the best trade setup, and other ones I just take it because it's sort of like a compulsive need to take. And so I just noticed that happening. And yeah, obviously I do not record all of those trades because when I try to make a video, I try to spend time on that video properly and just explain my golden trade, right? But if I start explaining video on making video on every single trade, then that's going to be like really such a hectic process. But yeah, like after thinking a lot about that, I just came to the realization that it's really time to grow up. And how much longer can I keep playing as this I don't know, a small losing retail trader? Because in my opinion, if you're over trading without having a proper, if you haven't really waited for the trade to happen, and if you're 100% sure that the trade will happen, sometimes I do analysis and I'm like, I'm pretty sure 80%, 90% this trade will work, and I go at it. But shouldn't be that case. Should be 100% trade. I know trading is not a 100% game. It is obviously it's a higher probability game. It's not a 100% winning game. But what I'm trying to say is, I'm pretty certain that if you wait for the right opportunity, you can get the golden trade. If you make the perfect entry, if you follow your perfect rule, then you can get the golden trade. So what I'm personally trying to do in my life, in this journey, see, someday I wouldn't call myself a successful trader yet, because I'm like, in my opinion, I'm barely just profitable. Sometimes I just go, like, the thing is, like, I make good profits, and then some days I just blow it, and then I again come make good profits, and by the end of the day, what happens is I either come to break even, and I somehow just manage to gather some discipline towards the end of the month and then make it in the green zone. But see, yeah, maybe profitable wise, like I'm far better than most of the traders. Like, I mean, not a professional trader yet, because at least in the sense I'm happy that if I'm losing, I'm only like losing max 2% in a month. And but the issue is, even when I'm winning at the time, because of my compulsive trading issue, I am also winning only 2%. At least that's what I observed. I'm saying this gathered with my overall net PNL and all, like Indian market and Forex and crypto and everything together. Currently, it's been like that. At least so far in this month, it has been like that. So it is a little bit annoying me, and I feel like it is time to really change from that. Yes, I know it's like a big thing. Most people wouldn't share that on the social media because that could bring you some backlash, but I don't really care about that. I want to be as honest as possible and actually tell my truth, because this entire purpose of this YouTube channel is to actually document my journey from being a beginner brokey trader to someday getting to that high professional, proper, like real top 1% successful trader. That's what my aim is, and that's where I'm going to. And this is the journey that I'm in until I reach that position. So keeping all those points in mind, as I said, now one thing that I've realized is, when I really pay attention to the market and when I give myself time if I do not jump right into a trade, and if I just look for that golden opportunity trade, I've realized that I win like 100% of the time. I'm winning. The reason is because, the me today and the me even 6 months back has changed a lot, has evolved a lot, in the sense I have gathered a lot of skills in the past few months. I have been trading for the last 2 years, and rigorously trading for only last 1 year. But in the last 6 months, the amount of skills, the amount of time I've invested in learning, like spending time in the markets is one thing, but learning new skills and developing a strategy and really putting more efforts into getting that winning, edge in the market. I feel like I finally managed to get that edge, but I haven't successfully executed it yet, because the reason is, as much as I'm winning, after winning a while, sometimes I also do make some bad decisions. Like I guess, like if you go to my videos, like 2 or 3 videos before the last one I uploaded, you can see one of the stupidest mistakes I did. Like, I had the perfect analysis trade that I did that day. That was the Indian stock market, like perfect trade. I guess 1:20 or something was the risk reward to ratio. Perfect trade I got. And I did it, like I waited for like 2 hours or so. Like it was, not 2 hours, maybe half an hour, I don't remember. But I got the perfect trade. And as soon as the trade went in my favor and I got the profit, next thing that I did was, like the most stupidest thing. Like I acted like a brokey trader. The next thing I did is I got the profit, and I saw the profit actually going much ahead of my TP, because it had consolidated in that region for too long, and it just flew right past. Like after that, that pressure buildup was over, it just flew right into TP. After that, I felt, okay, maybe now this means if I get into that ride, I can maybe make huge more profits, and no analysis whatsoever. Waited for like 1 minute for a small pullback and just entered the trade, just like that. And guess what happened? That 1:20 risk to reward ratio trade that I made, within 2 minutes, blew the whole thing. And that day ended up becoming the shittiest day. Because after that, on that same day, in that same video I've recorded, I ended up revenge trading. But I did spend some time trying to, getting better setup then for my 3rd or 4th trade. But on the same day, I did the 3rd or 4th trade. That's what I'm trying to tell you. And because I was so exhausted, then your mind won't work right when you spend that much time in the market, when you're just trying to, when you just lost a lot of money and then you're trying to recover it. On the same day, you just end up, doing very terrible. And that day was a lost day. And I have recorded that. I've uploaded that also on YouTube. Because thankfully I was recording on that day and you can see that. So, such a terrible thing to do. And I'm really not proud of myself. And it's such a horrible thing. But anyways, after, making all those stupid mistakes, and psychologically what happens is, then you have this issue, right? You keep thinking, okay, what to do next? Maybe I'll just blow my entire account and then restart, just deposit more amount, some money savings that I have left. I'll take that, deposit and start fresh. That's one thing that you can do. Other thing is, okay, don't blow the account, just wait. I just keep whatever loss I have, maybe 1 or 2% loss in the account, I'll just easily just fill their account back up so that I can keep at the capital that I wish to trade at. Is that the right way to do it? It's not. Even though it maybe would feel like, okay, it would actually make my psychology better and I can trade better, but I do not think so. I feel the best time to start is always now. And by now, I mean like right now. See, regardless of whatever losses or whatever wins you have made, forget everything and just pretend that today is a new day and today is a fresh day and you're starting completely from scratch. And if you were to start completely from scratch today, whatever capital that you have right now, maybe you're 1%, 2% lesser than what you started up initially. Okay, and initially means like, yeah, when you started this trading for the month or 2 months back, whatever. But maybe if you had good risk to reward ratio, then maximum your loss entire account wouldn't be more than 5% less. Which is where actually one of my accounts is sitting at. It's actually 5% less. So that's what I am relating to this and I'm talking about that. But if you do not have good risk to reward ratio, then I'm sorry. If you're sitting there with your 50% of your account blown, then please not trade. Like, take a break and work your other day job or whatever, get your income, then save up some more amount of money, and in that meanwhile, when you're saving up that amount of money, try to train yourself and do some demo trading, virtual trading. Don't put your real money into the market. It doesn't matter, right? It doesn't matter. It's right now, you're not here to make money, you're trying to master this craft. So for that, you spend the time in the market learning the skill, and then when you have saved up enough money, you come back, you refuel your account, and then get it back to your whatever comfortable amount of capital you actually want, your desired amount of capital, get it there, and then you start trading again, this time completely fresh mindset. So the best way to actually win, it might seem like if you're sitting only in like 5% account loss or something, then actually let me tell you, it's very easy to come back. Do not fuel that account back with more money just to get it back to the cap and then start trading. Do not do that. That is the worst thing you can do yourself as a trader. Rather, your first goal should be getting your account back up to the desired capital size you want. For that, do you take huge risks? No, do not take huge risk, because now, in my opinion, do not let your account go lesser than 10% at any time. If your account overall, like if you, let's say you started with like 10,000 and less than 10,000, less than 10% is like, if it goes 9,000 or less, then stop. Take a break. I don't care. Save more money and start with 10,000. At any point of time, your account shouldn't be less than 10% of what you started, because that means you're doing something wrong. And see, it may not be that exactly that you don't have a trading plan, because if you're someone who maybe has invested a lot of time, you probably have a very good trading plan and very good trading strategy. But what you lack is trading discipline. What you lack is you constantly take, maybe you're actually a professional trader without you yourself knowing, who takes like very good golden setup trades. But then you end up making mistakes and you lose yourself in certain few days where you just, because you're feeling unproductive and you want to feel productive, you step into the market and then you blow it just for the feeling of productivity. That's not trading. I have made this mistake. That's why I'm saying this, because I can relate to it. You spend hours and hours taking the perfect trade, and then you go, just one day you're bored. So you just maybe, just try, maybe, okay, this looks fine. In this pullback, I'll just buy it and just see where it goes. That's when you really mess it up. For censoring purposes, I'm not using the other words because I'm not sure if I should, but anyway, you get it. Like, you blow it all because of one stupid decision like that. So point is, it's all right to feel that, but next time just remind yourself that this is a business, this is your startup, and treat trading like your startup, like your business, like your product, like a baby of yours. Then your entire perspective will change, and now it's like you're delivering the most perfect product. Most of you would have thought I was going to say delivering a baby or something. That's not what I'm saying. I mean, like, you're trying to make the perfect product and, give that product, like, you think something like that in your head. Like, that just helps for your analogy, right? That's what I'm trying to say. So this entire trading is actually a business. So you have your stakes in the game. You have all these different, what analogy can you say? these are your various customers, maybe, I don't know, or let's say you're the business owner, you're the CEO or something, and all of these are your people who work under you, maybe some managers who work directly under you, and who has, I don't know, it could be anything, could be whatever feels comfortable. Just make an analogy in your head, and then try to really see this entire thing in whatever business model that you would like to see it as. So I have a particular thing in my head where I'm actually trying to see this as a business, like this is a business. So just ask yourself the question, if it is a business and if this is actually a bread and butter, would you really trade just for the compulsive feeling? Would you really take risks in your business when you do not have a certain edge in the market? You would take risks when like, if you take this, it's really going to pay off. But would you take random risks saying, what, I'm just going to sell this portion of my company to this guy and just see what happens? No, you would never do that, because this is your blood and sweat that you've put into the market. This is your everything, months and months of hard work. So when you think of trading in that perspective, everything changes. Everything changes when you look at trading in that perspective. Because from now, what happens is you start seeing this as your business, and when it is your business, you just need to know that the focus, your perspective, everything, you start looking at things in a different perspective, because now you do not look for like 500 trades a day, or 5 different opportunities a day. No, that's stupid. In business, you get one golden opportunity for the week, maybe like that, right? So what you have to do is just hunt for that perfect opportunity. Be really patient for that. You really need to understand this is a very fascinating space, and the one who's more patient gets better rewards. That's how it works. So be patient, stay right there, and really focus on what is the best trade that you can take, and see what is the best, what can really play in your favor for your business. So having said all that, I spoke a little too much today, but that's all right. Real traders who are watching this video, I hope they will get some value out of this video. So that's the entire purpose of making this video too. So before we jump in, let's first take a look into the first one that I see right here, Euro USD. First thing I'll do is I just want to form my higher narrative, right? So there we go. Okay, these are some previous analysis that I've made and kept, as you can see right here. But this just never worked out. I did not get an entry. I did not enter because I never paid attention, and you can see. This is why I'm telling that I know I made it, but there is just some things that I just have to learn more. As you can see, there was a 1:5 trade that I marked out right here. I think I probably would have taken this trade too. I don't remember. I think I did. I think I did, yeah. And I'll tell you how I got into the trade. I kept a pending order somewhere over here. So when it came and it hit here, it just automatically just put me right into the trade. I did not wait for the market shift to happen and get my confirmation and entry point, because I was like, I'll have to stay awake and that'll be too much effort. So rather, I know like from this zone, the market is probably going to go up. So I'll just take that chance, and anyway, after the market shift, it's obviously going to go in my direction. So why wait so much, right? I'll just take my trade. That's what I thought. And so I just put the pending order there and I went to sleep. And next thing I never looked back, and yes, it went. What happened is, it went, the liquidity sweep stopped me out of the trade. And then now when I wake up, now when I'm looking at the trade, like when I came back to the markets, I don't know, this is probably 1 or 2 days back, I guess, because this is the 4 hours chart. So 24 hours, 48 hours, whatever, before, you can see like it did probably make a market shift here. Would have given, if you see the lower time frame, it most definitely would have given a good entry too. I'm in the 5 minute. Let me see. Let's see where the market shift would have happened. So I think I would have been tapped into the trade somewhere over here. But if I waited and if I really observed the markets, let's see what would have happened. So this is the previous low we have, right? And this is the previous high we have. First thing that I would look for is a break of structure right here. Let me explain. So I'll tell you how. See, I know everything because I've learned everything now, but I'm making stupid decisions because of something is wrong, but it's okay. If I just fix this one particular part, this is what I'm very confident that this is what is actually going to take me to that successful trader edge. Like the professional, like top 1% trader. And I'll tell you how. Like, if the right thing to do is, entire analysis was right? I'll tell you why. So in the 4 hour charts, if I see, I'm not going to take a trade right now. I'm just actually explaining my analysis now. So see, in the 1%, in the 4 hour charts, when you take a look at the market, this is the 4 hour chart. Where was the previous best supply zone? Like, best means the most strongest supply zone. Where did it happen? This one right here, right? In fact, if you zoom it in even further, if you take a look here, this point right here, this is the previous most high that the market ever came to. Then from this high, it led to a market shift right here. It led to a breakout structure of this swing low right here. And after the breakout structure, it gave a pullback back into, if you take a look, this order block right here. This is obviously the place where the supply did enter the market. So as very golden, as you can see, market was in a bull trend right here, right? Lower low, from this low, swing low, then higher low, lower low, higher low, then higher high, higher low, higher high, higher low, higher high. And next, what you expect from the market is, obviously, if there's a higher high, next higher low should be above this, right? So let's say that somewhere over here, probably I got this higher low. But this can only be a higher low, valid higher low, once this will lead to a break or structure for the previous higher high. So that when it breaks past that level, when a new higher high, when it's actually formed, when it's confirmed formed, that is when you can actually for sure say that you have the golden, you have a confirmed higher low. But what happened here? This tried to go up, right? Tried to go up, but did it sustain to form a closed candle with a proper higher low, higher high? No. Rather, what happened is it had more selling pressure and it did not basically form a new higher high. From there, one thing that we can see is, most likely there's a failed reaction happening there. So most likely there could be, since there's a supply zone being formed here, most likely there could be a market shift. But how do you confirm the market shift? You confirm the market shift when you wait for the breakout structure from the previous swing low. This is the previous swing low. Where did the breakout structure happen? You see this pullback, bam, bam. This candle right here led to a breakout structure. What happens in a breakout structure? Now you have confirmation that a market shift has potentially happened, which means the trends are reversing from the bullish to a bearish trend. So what's next? So next you can actually look for what? You can look for a potential short selling opportunity. And how do we do that? First, for the short sell, what's the first thing that you need? You need an entry. So where exactly do you enter? See, this is how you revise in this. I'm explaining the logic, how a real trader must think. So now, where exactly do you enter is the next question. Well, where was the previous supply zone, major supply zone? This purple zone right here, right? It led to a breakout structure right here. Now, we know that once a breakout structure has been formed, 95% of the time, any proper structure movement would tell you that in the first downward movement that you see right here would not be sufficient enough for the breakout structure to have confirmed, right? That much is valid. Which means, why? Because it did not have sufficient selling power to sustain the breakout structure. Keeping that in mind, one thing for sure we can say is, definitely the market needs to pull back a little bit, take the prices a little more to the premium level, and invite more sellers into the market. For that, it will have to go to the major zone where more smart money is potential to enter. But smart money enters if it's in a selling opportunity. It is going to try to get the price to as much as premium as it is possible. So for that, it needs to invite more sellers into the market too, and that will happen in the most important zone. So first thing you need to know is, where is the most important zone? This one right here. This is the order block that led to this market shift, that led to this breakout structure here. Let me just explain it more clearly so that you will understand what exactly I'm saying. Let me go for my drawing tools. Where are my drawing tools, man? Okay, right. So breakout structure that I'm talking about with the help of this line, I'll just show you this one right here, right? You see this downward movement breaking this line, that is a breakout structure, which means after the breakout structure, obviously it did not have enough selling pressure, so now it will have to pull back the price to take it to mitigate this order block region right here, because once it touches this zone, it means that is where the remaining orders, like it could not fill in the first go. There'll be, let's say, only 25% or 50% of the orders were actually taken first. That's why this much push came, just enough that was necessary to lead to a breakout structure. But after the breakout structure, it needs to pull back in order to mitigate the remaining, even maybe 25% or remaining 50% of the orders, so that it can get more sellers into the market and finally give the ultimate move that it needs. So that is exactly where smart money enters into the market. So you can see pulled back to mitigate that zone. Most likely to the 50% mark is what I've observed in my experience, and exactly that is what has happened to. Up to 50% it went, pulled back, and led to doji candle formation, showing indicating a market correction, a market decision, indecision in the market from the pullback. So now it is having doubt about the pullback. Obviously, just some of the patterns that you can see through the candles and patterns in the market. Bam! The next thing, smart money enters the market. Boom! One major pullback directly all the way to the down. Very simple trade. So if you were going to take this trade, what you should have done is, let me tell you. So in this pullback, once you see over here, if you're trading even just purely, if you're trading even only on the 4-hour charts, which I do not recommend, but I'm saying even on the 4-hour charts are very beautiful. If you're someone like a chart trader who just follows something even as simple as like a breakout trading, which is the retail trading, beginners can do this. Like I started out like this itself, and even up to this point, sometimes I do relate to these concepts, but that's not how smart money concepts work. So that it's a more advanced level of trading, I understand, but we all have to start somewhere first. So keeping that in mind, clearly you can also think the chart pattern wise, this is a head and shoulders pattern. Very beautiful head and shoulders pattern, right? So what do you see there? See, I randomly opened this chart and I'm just explaining like some of the history, right? This is called backtesting your strategy too, showing you how the market works. So this is also very important. You do not have to take trades every single day. Rather, you should spend time analyzing the market and learning new things, learning skills, and seeing how exactly the market works. So keeping that in mind, as I was telling you before, this zone right here is where smart money will enter. So even if you keep a short selling position open right over there in the 50% zone, I'll keep my stop loss above the candle wick high, because in case a liquidity sweep happens, that's where it should maximum it can take. If it goes beyond that, then obviously the market has shifted again. There has been a change of direction. That's all right. That's because that is not under your control. But what is a 90% scenario that you can see is that market shift did definitely happen, which means now it's definitely looking bearish. So when you take a risk, you enter this order block right here. When it comes back to, when it does the pullback right here, when it comes back to mitigate that zone, that's when you enter the trade, and you keep the stop loss above the candle wicks high, because in order to protect yourself from any potential liquidity sweep, and the spread, taking that into account as well. And where do you target? Very simple. You can always just go for a 1:3 trade. It works out almost all the time. Yeah, 1:3 trade almost works out literally all the time. So if you're a safe trader, this is what you can go for. See, bam, in one candle you have won that trade in 4 hours, obviously. But otherwise, the potential targets you could look is obviously the swing lows. So this is the first swing low that I see. So this is the first target that you can keep. Otherwise, look for the best swing low. See, I see a potential. If you say swing low wise, I see a potential like this is the most perfect swing low. If you see right here, this is where the entire market did reverse. So this is the perfect swing low that you can see, which means I say you can pull the lead. If I keep a horizontal line right here, at this swing low is where actually you can target. This one or even this one is also fine. But extreme case, if you even want to trade, most likely, if you're like a more, swing trader who holds for a very long time, you can see very beautifully. Look at that. Look at that. Look at the trade that you captured. 1:8.5 trade. You just target the swing low. Why the swing low? The swing low because if you see on an even more higher time frame, if you're looking for a more break of structure from here, if you need market shift on a 4-hour candlestick pattern, then you need to lead to a break of structure over here, which means at least to lead to the break of structure, it will come up until this point. After that, maybe it could reverse or maybe it could continue. We do not know exactly. But at least until there, for the market shift to happen, we can target the swing low for sure. So if you target that swing low just because it will potentially, obviously going for a break of structure, you get that 1:8.5. Bam. Beautiful trade. Right? So this is how the market works, right? So you see how much effort went, how much thought process went before taking the trade. If this is how you trade, then that's how you become successful. But this requires a lot of patience because this is 4 hours channel. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 into 4 hours, you do the math. More than 40 hours, it's like a 2 days, 3 days trade. Do you have that much patience? Obviously, it's very difficult if you rigorously keep looking at the charts. It's very difficult to do this thing. Rather, what people should do is like you follow the set and forget strategy. You do the perfect analysis, get the perfect entry, but once you set that target, just set the trade right there running, and then just never look back at it. Come back when it hits either your TP or your SL, doesn't matter, because you have done the perfect analysis, you have taken the perfect trade, and that's all that matters. So this is just back testing and seeing one possible trade. Now let's see how the market performed after that, right? As you can see, it went falling, then it started having some congestion here, and then the market has pulled back all the way till there, and now it's coming back till here. So what is the next possible trade that you can see? So see, one thing that I did see is, obviously I would not have been able to capture the trade here because I did not, in the 4-hour scale, I'm not able to see a very good market structure. So what do? You just do not enter the trade. You just let this market run and come back later on, maybe after a few days, and you see how the market is performing. And then after a few days, when you come back, you observe the market has pulled back and it has done this thing right here. What does this mean? When the market has done this thing right here, right? What does this mean? If you take a very close look, one thing that you can observe is, again, you see, this is the swing low, this is the swing high, and this is the another swing low, and this led to a break of structure right here, and it went to formation of next swing high. Very simply, what do you do next? If this is the swing high right here, now it has to pull back, obviously, to form the next swing low, right? Similar to this. So we need to wait for the pullback, and you will get the next swing low. Once you identify where the next swing low is, you get your potential area of interest of swing range. This is where you'll be entering your trade, because you don't enter the trade immediately. I'll explain how to enter. Like, I made a bad mistake, but we'll try to analyze how it could have been better. So what you do is, once you get, okay, swing low came and then pullback is happening. Now, one thing for sure is, the market, if you take a look over here, after this entire fall, it has went a very long direction. It has went, it has been traveling for a very long time now. So now, if it is going to pull back, it actually might have some remaining orders. There are two things it can do now, right? It can come back, lead to a break of structure over here, and return to a bullish nature. That's one thing. Second part is, it still remains bearish, but it'll come back to mitigate the zone in order to tap in, to invite more sellers into the market before falling again. It could be either of those. You don't know, that is not your concern. You can wait for the market to play and see what is the best case, like where exactly the trend is leading to after a while. And once a trend is confirmed, then you can take a part in that ride and then ride the market and then go for your next trade. But all that matters to you is getting a winning trade. It does not matter where exactly you go, but one thing you need to know is what is the next zone it will come to. So one thing for sure is, it will come to this zone right here, either to mitigate the remaining sell orders and then continue the bearish signal, or because it has went all the way till here and then made an entire market shift change in direction, coming back bullish, it could potentially take out this high and continue in its bullish nature upwards. That would give it a completely new trading possibility where it will lead to a takeout this breaker structure. So you would not enter the trade unless and until it has come to mitigate the zone, and you try to observe what is the next possibility, whether a market shift happens or continues bullish. For that, you need to analyze its market structure after the trade, after the market has come to your region of interest, which is this zone right here. This is the major candle that led to this fall, or you can even pull for this, most likely to the purple zone where it comes. To mitigate that, that is when you can analyze for your next trade, right? And then you can get the perfect trade. But if you haven't taken any trade yet, then you do not enter for any trade, because if you enter a trade right now, then you're being a brokey stupid trader. Do not trade that way. That is the worst trading setup that you have. But yeah, if you're someone who identified the market at this previous swing high and you waited for the pullback, then you could potentially take a trade. If confirmed swing low came, then you know that this swing low will be trying to lead to a breaker structure right here, thus pushing the market after this breaker structure, allowing it to hopefully, eventually allowing the market to mitigate these regions right here. So keeping that in mind, you can actually enter for a trade somewhere here and target the swing high right here, and you will guaranteed get another successful trade. That's what I marked here too. It's a 1:5 trade. So like if you risk $10, you can potentially win $50, and that's the perfect trade that you can do, right? So keeping that in mind, let's see how you should have entered this trade and how my entry was wrong, because I kept a pending order, so obviously I could not enter the trade. So what I'm going to be doing now is I'll take you down to the 1 hour charts. Okay. All right. So our entry model will always be in 15-minute or 5-minute candles. So whichever you're able to understand better. So the one thing that I see is, in order to get an entry, obviously in the momentary direction, if you see the market has been looking bearish right here, right? So when you notice a bearish market, the very next thing that you need to look for is, when does a market shift happen? Because when this pullback is over, then when the market has shown you a proper reversal, a proper shift to the bullish nature, that is when you should enter the trade, because that is when you will be winning the market, right? So my mistake was I left a pending order because I was just lazy and I acted like a fool. Like, I absolutely take complete accountability of this. I acted like a fool and I kept a pending order right here, just hoping that the market will tap in here and eventually it will do some market shift and just go up. But what happens is, I kept the pending order and I obviously set my stop loss and target, a TP, and I went. And after it got tapped into my trade, in that momentum that it came rushing downwards, it went for liquidity sweep, bam, 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 took out the stop loss, and I was out of the trade before I knew it. And I'd never observed the market at all. So I lost an opportunity. It's not lost an opportunity. I took a bad trade. See, very good setup, but my entry model was horrible. So how do you become better now? You get a better entry model. So how do you get better entry model? We'll do the analysis right now, and I'll show you how that's done. But what you need to remember is, next time, if you want to take a trade, you really need to be very patient, and you have to spend a lot of time trying to, you have to wait for the perfect opportunity to actually, before you place your entry. And then when you get the perfect entry, then it'll be smooth as butter. You can just, run on the trade. Be very good to go, with no doubt. And I'll explain how exactly you can take that perfect trade right now. So if you are smart, the next thing you need to do is, as I said, you have already analyzed this much, that overall you saw the market structure in the 4 hours, that eventually if this pullback is going to be sustaining, then lower, higher low, higher high, higher low, breaker structure right here, new higher high, higher low, then it should eventually potentially lead to a breaker structure here, and after some minor whatever structure it does, it will eventually come to mitigate the zone. So this much you're sure of in the trade, right? So if you keep that part in mind, the next thing that you need to do is, since you know that market, you're looking for that long position trade, you actually need a market shift that will confirm this pullback to be over, and whatever retracement is over, and then finally the market shift will confirm to you that now it has shifted back to the bullish, and that is when you should enter the trade. So what you need to do is go to the 5-minute candle or 50-minute or whatever is your entry model and look for that perfect entry signal. And how do you get the entry signal? You need to look for market shift to happen. And how do you look for the market shift to happen? Well, internally, you need to see. So if you take a look here, if you take a look like right here, you see, you wait for the pullback to get over. So somewhere over here, if I see in the 5-minute candle, a new swing low actually did form. So next, unless and until if a new low comes to take out this low and go further lower, only then it's a bearish trend. But as long as it is trading above this low, so there hasn't been a new low formed yet. So what I will be looking for is hopefully the previous swing highs breakout structure. So where is the previous swing high? This is the previous swing high, right? So wait, let me just remove this thing for you, right? Because it's a bad entry. You need to look this swing high right here. This swing high right here. And this was the swing low right here. Oh man. So this was the swing low right here. Which means now in our entry model focus, we are focusing in this particular swing range right here. This is the only zone we'll be focusing, where we are actually waiting to see a market shift happen. For that market shift to happen, what should you actually look for? In my opinion, you should actually look for, see, what is on a safest game, very easy entry would be, you wait for this low to eventually take out this high. So you look for a break of structure right here. So let's look where if it has taken high. If you see this high, this one right here, here is one possible entry that you could have seen. But you have to wait for confirmation again. So as soon as it would have come for a breaker structure here, would you have entered the trade? It's up to you. See, if you're someone who is a little impatient and still want to enter the trade, if you saw a minor breaker structure itself, sure, go ahead, enter the trade and have the stop loss set below this swing low, so that in case it pullbacks here and still manages to go above it, you can still be in the trade. But would I take this trade? No. Why? Because there is no confirmed entry yet. The reason is because this is not exactly a breaker structure. Because if you observe closely, there is a lot of liquidity above this candlestick right here, right? And it needs liquidity. It's basically a fuel for the market. So most likely what happens is this pull, if it's only this much confirmation, only like a very short candle, it went just to grab here. As you can see, it's a clear liquidity sweep. Went, grabbed, swept all the liquidity over here and invited some more selling pressure and started going down. So that is not why it came down, because a lot of brokey traders, retail traders would have actually entered the trade somewhere over here. Like I did too, without any analysis. So they'll keep a stop loss like just below somewhere over here. So it'll just come to basically hunt the stop loss, and the breakout traders, breakout traders would have kept the stop loss here. So either way, before making the major move, the market will actually move up and down, trying to hit the market in both the direction and sweep liquidity, eventually gathering up enough liquidity so that it can have, see, smart money will probably come in place like millions of units ordered in one go. But it needs, if it's planning to buy 1 million units, it needs million sellers too in the other side of the market, right? But if you take a look at any given instant, like, a big institution might want like 1 million units of something and they're ready to buy it instantly. But if you want to buy something, there has to be someone on the other side to sell 1 million units too. But if you, obviously retail traders, there won't be someone who's willing to buy 1 million, sell 1 million units in one go, right? Because that is just not feasible for normal people like us, because we are trading in amounts that are, the individual worth of wealth. So when you put that logic into a thought, what makes sense is, since the market is actually looking for enough liquidity, enough liquidity means enough fuel to go gather enough power to give the move in the desired direction that it wants to go to. It needs more orders. So it cannot get that from a single buyer, because since this guy is buying right now, so it needs seller. So it cannot get all of that order from a single seller. So what it'll do is it'll take maybe one unit from million sellers and finally get enough liquidity, because at the end of the day it just wants all that units. So it needs enough liquidity to actually sustain the upward movement. Best way to do that is sweep the liquidity and the stop losses that people have kept here. Those are all orders. Sweep both of those liquidity from either direction, like right here, and eventually it would have gathered enough liquidity, enough fuel to finally fuel its major movement to its desired direction. To the on the macroscopic scale, you have already seen where the market is the market has to move, and that move you'll be able to observe if you take a look there. So that's what will be happening. So basically, it swept liquidity here, got some more sell side liquidity because now it can grab some more potential stop losses of the other buy orders that are placed over here. So came again some more liquidity sweep. This sweeps over here were powered by this sweep right here. This sweep right here was powered by this sweep right here. So it's a very beautiful liquidity that you see in the market. So again, this is why you'll have to be very patient. So this is not where I would recommend entry. And where would I recommend entry? You wait for the next retracement to get over to. You see it's again in the minor scale, it is happening. Higher high, lower, again one low right here, lower high, lower low, lower high, lower low, and lower high, lower low. Does a lower high happen right here? You take a very good look. Doesn't happen right here. It was not able to form a new lower low right here. Rather, it was a little bit higher than the previous low. So this could potentially be a market shift. But is it a market shift? Not yet. How does it become a market shift? Well, you see this high right here, this swing high right here, it should lead to a break of structure of the swing high. So this over here is the swing low, and this over here is the swing high, right? Now if this swing low, if you see that this kind of gave a failed reaction, so that potentially means this demand zone right here, you waited for this pullback. Obviously this first pullback wasn't necessary to lead to a break of structure, so it pulled back to this zone, and this demand zone did do its work and again managed to, once it mitigated the zone, some more orders did enter the market, and bam, price just sky rocketed upwards. Now you might regret, but I did not enter the trade and I lost all that points. Nah. You're not a gambler, my dear friend. You are a trader. You are a professional trader. At least that's who you want to be. So do not trade that way. If you trade that way, then you lose. This is a lesson to myself too, because even though I know all of this, I still haven't been able to execute this perfectly because I haven't been patient enough. I take these perfect trades sometimes, and then I end up taking the stupid trades too on the other end, which is what I need to stop for myself. And see, some people, when I start sharing this, might criticize us on social media, on YouTube, whatever. There obviously might be haters who say, "Oh, but you say all this and you broke your own rules." Yeah, man. Like, I am a normal guy too. I am someone who's trying to figure my shit out too, and I keep messing up now and then. But I'm just sharing my journey so that I can document this entire journey that I am doing, so that people who are in similar boats as me can also see and learn how exactly this works, so that we can grow together, and hopefully all of us can together get to the point that we want to go. And that is the entire purpose, and that's the whole goal. It's not a growth that I just want to say for myself. Rather, I want to help people who are struggling just like me. And anyway, before we go too much off topic, let's get back. So now you might think, I have done this mistake too. When I see such a huge green candle, I enter the trade immediately, because I'm like, oh man, I don't want to lose on that bull. What if market just goes out of control and bam, and goes all the way to take profit? Then I will lose it. So I just need to enter the trade, and then I'll be like, you know what? I just enter it. Sure, you can do that. But should you? No. And I'm telling this out of experience. It might look like, yes, if I entered here, yes, I'm getting more points. So it's best thing I can actually enter and I make a lot of money. Yes, in this trade setup, in this example that we came across very randomly, I did not cherry pick this, I swear. Just very randomly I opened, and this is the first thing I was seeing. So I thought I might as well explain this from a mistake of my own. So yeah, But what I'm trying to say is, if you enter here, even though in this example, you would have made a lot of money, it does not work out all the time, because most times, maybe it could have been just a liquidity sweep upwards, and then bam, it'll just start falling down, breaking all the way till down, like in a very crazy manner, coming to this previous demand zone right here. So that could also happen, and I have made this mistake, and blown accounts a lot of times, because I made this stupid horrible mistake without having the perfect entry confirmation. So that's why I'm saying do not do that. Rather, what you should be doing is still be patient, because market always gives you opportunity. 100% of the time, market gives you opportunity for the people who are willing to be patient for it. As simple as that. If you're patient for it, the market will give you the opportunity. So how do you get that? Well, you do not enter here, rather you wait for that. See, in some cases it would have been a slow, gradual break of structure, but in this case, bam, in one candle, in 5 minutes itself, it led to a complete break of structure. Fine, no issues. But now one thing confirmed to you is that there has been a break of structure right here, right? So now, since this break of structure, it took out the previous swing high, one thing we can confirm is a market shift has happened, which means now potentially the market has shifted from this momentary retracement of bearish nature to potentially now it will go, like we do not see this future part that time, right? We are only seeing from here. So now when the break of structure, this candle happened, now we'll be like potentially the market will be bam going upwards. Hopefully the shift has happened to the bullish side. Now what we have to do is, obviously in such one go, the market will not be able to sustain a complete bull nature. The market will have to pull back in order to take the price to discounted once more, or maybe even 2 times more, before it can invite some more buyers and mitigate that important demand zone once more, before it can grab enough liquidity in order to go give the upwards boost. So that is what we'll be looking at. So we know that this is our demand zone, major demand zone. So now after such a huge movement comes upwards, the next thing we need to wait for is the retracement, the pullback, to come and see if it will come back to mitigate this major demand zone right here. And if it comes to mitigate the major demand zone right there, after the mitigation happens, that if you see that mitigation is being sustained, if the mitigation is being sustained, then you can be sure that okay, the buying pressure is actually able to continue over there, and people, the price is consolidating in that zone, and it has pulled back to mitigate the orders. And if you see a minor final market shift, one more shift happen after this pullback, that's when you enter, which means bam, I'll show you right here. You take a look right here, market has boom, came all the way till there. Market shift did happen, break of structure happened, market shift did happen now, and now we're waiting for the next pullback. The pullback we'll be waiting at the demand zone right here. And pullback, yes, it did come to the demand zone, and as I said even earlier in the video on the other trade, most likely it comes to the 50% zone. I don't know, this is just something that I've observed for myself. It comes to the 50% zone of the pivot candle, and if you take the past, if you look at there. So once it comes back to the 50%, now if you want, you can immediately keep a pending order here, and after these many confirmation, bam, you can go for an entry right around here, right? You can easily go. But what I would rather do is just wait a little more while, just to confirm this pullback, is in fact going to pull back. I'll go to the 1 minute candle too. This is very good. Like, this is the ultimate professional trading, by the way, that I'm telling you, the secret sauce. Let's just go right there. Yeah, in the 1 minute candlestick, if you want, you can enter there. So after this pullback has happened, right, pullback, damn, and pullback will happen right here. Once this, when it comes back to mitigate the zone, what you can do is wait for that minute market shift. So it came to mitigate this 50% zone, and you see one red candle right here. Yes, swing low. It took out in the next, when the candle takes out this swing high right here. This is just one entry possible. You can even take other entry, okay? You could potentially even take an entry right here when the swing low happens, when it leads to a break of structure right here. You can enter there too. And yes, like it would have went to a drawdown for a while, but eventually it still go to profit, right? Because getting that much perfect accurate entry is obviously difficult. But let's say you miss the entry in the first mitigation, all right, because it just barely touched and you don't want it to risk so much, no problem. Let's say second time, why it's coming here, I'll tell you. Like most people, when they come in the first mitigation, so they'll enter the market, right? And they might keep their stop loss very below because they are scalping. In that zone, there is some liquidity available here. So market will give some fake out. This is called inducement, right? Smart money institutions will give you inducements saying, okay, because it happen, go for it. Bam, it'll go up. You'll be like very happy. Oh, I'm making profits, blah, 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 blah. But then it starts pulling back. Oh my God, it's pulling back, and bam, liquidity right here, swept, boom, swept. So now people will be like, okay, maybe sweep is over, so I'll enter trade again. You can again enter trade here, no issues. But all I would suggest is if you're entering such trades, like over here or here, make sure to keep your stop loss low, enough low, so that I would prefer for a very safe trade, keep it below from where the market shift happened, the previous swing low, keep it below that zone right there. If you're keeping here the stop loss, and if you're a scalper, obviously you cannot do it. People who are there to scalp the markets, what they would do is they would obviously go for entry here, and they'll keep stop loss like just below that candle, and then go for a 1:2 trade. Maybe 1:2 trade, you'll obviously win. But if you go 1:3, 1:2, 1:3, 1:4 or something, it'll come very close to TP, and then it'll just reverse pull back, and then it'll go available liquidity right here, right? You see available, wait, I'll move this. Available liquidity right here, it'll tap there, bam, pew, again, swept that liquidity, and then try to get more buying pressure. This inducements will keep happening. If you're someone who's scalping, you can easily be hit out of the trade. But if you're being patient enough and going for more of a swing trade opportunity, it's not even swing trade because you don't hold it for like, so many weeks or months or anything. It may be max 1 or 2 days. That's all I'm asking for. Because become a successful trader takes patience, right? So you could have entered here or here. If you kept your stop loss here, you're still fine, good to go. Otherwise, you wait for the couple of inducements to be over. But the thing is, you cannot predict where exactly the inducement is. That's why I would suggest that you enter in the very first pullback itself. That is what I would have done. I would have entered right here in the very first pullback. When I see a next green candle being formed, bam, I would have entered, and I would have kept my stop loss somewhere over here. But let's say you missed out on the first entry. Obviously, this target won't be here. Target will be much higher. I'll explain the TP zone soon. But yeah, if let's say by mistake, if you missed the entry here because you slept or something, or you did not see the entry, then you wait. Don't enter somewhere over here. That's a horrible mistake you could do, because you're not sure the market will keep flying. Maybe it will again retrace again, right? So you wait. Do not be greedy. Like if you lost that opportunity, no issues. Market will give you millions, thousands, millions of more opportunities if you be patient enough. So you just forget about all that. And when you wait, okay, in this case at least, thankfully market did come back to mitigate that zone. So now you be patient and you really wait for this liquidity sweep to happen. And when you see the next green candle being formed, bam, you enter there, right? Now, let's say you missed that also, right? You missed that too. Well, if you're lucky enough, if the market still hasn't mitigated the zone enough and did not get enough buy orders, then when it comes for this next sweep right here, you can enter there at this green candle. And obviously, we can wait for the breakout structure over here. And once the breakout structure happens, small, you can either enter there or a minor pullback. So 1 minute doesn't matter. But let's say you manage to enter in the minor pullback over there after the breakout structure. And obviously, for the safety purposes, you will keep this stop loss below the swing low right there, and bam, you have entered the trade. Now maybe the market could potentially even come back to mitigate the zone even further, but that is not under your control. But as soon as you enter the perfect trade, now you forget. Even if you entered right here too, you just set it there and you forget, and then you do not turn back. Because now the market might do all of that tapping again, mitigation, blah, 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 and finally inducements, liquidity sweep, blah, 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 but none of those will affect you because you have kept your stop loss with enough room, with enough leeway for all that, manipulation or whatever you call it, for that enough thing to happen, fueling in the market to happen. And after you set that, you just set and forget. After setting your TP, obviously, and it will come to your TP, and I'll explain how to set your TP now. You go to the 4-hour candle, and you see if the market shift has happened, right? This was a swing low, this was a swing high, market shift did happen here, you entered right there, you entered right here, So from swing low, if potentially if the swing low is happening, I mean not right here, right? You entered the trade somewhere over here. This is the mark. This was my previous mistake trade that I showed. I'm not removing it so that I can learn from my mistake. But yeah, point is swing low is here in the macroscopic scale. Swing low is here. Swing high is right here. If it comes to take out the swing high only, then breakout structure will happen. For that, you need to target that swing high right there. This is a guaranteed trade, right? If you keep that target right there, if you zoom in now to go back to the 5-minute candlesticks, just to help you set your TP, you pull the TP all the way till this blue line right here. Why this blue line? Because that was the previous swing high. Wait, was it this blue line? Where is it? Let's go for our, yeah. Sorry, this is not the blue line. Okay, I think I marked on the wrong blue line. My bad. 5-minute chart. So this was the breakout structure line. So this is not exactly what we were looking at. Right. So this is where you have entered the trade, right? With your stop loss below the swing low right there. And now if you go to the 15-minute candlestick, okay, it just didn't load. I'm sorry. So you entered the trade right there. If you zoom out, that's where you entered. For your safety purposes, you have kept it. Obviously, see, later on you can trail the stop loss to bring it like even here, okay? Like after you come back and see significant movement here, you can even make it break even and secure the trade, like make it a perfect trade. Because if it comes to here, then most likely all the inducements and liquidity sweep is over. So now you're on a more safer trade and you can just do that. But let's say in the scenario that you just completely went set and forget, then obviously you kept the stop loss like right below underneath that swing low and you got out in the trade here and you're targeting the previous ultimate swing high in the higher narrative in the 4-hour time frame or even the 1-day time frame, whichever you prefer. I prefer 4-hour time frames. You target that zone right there and then you set and forget and you got a very beautiful, this is a 1:2.6 trade, no issues. But obviously if you want to risk more, I wouldn't risk more. Like let's say if you're already in a drawdown, do not risk more, go for this trade and just be happy with it. Or if you have like, you already have significant leeway to risk more means, then obviously after you enter the trade in the smaller time frame, you look for which is the previous swing low and target below that swing low and you will get a 1:7 trade right here. So that is up to you. It depends upon what is your risk taking capacity as a trader, right? And then you can get that beautiful trade right there after targeting swing high. Now, yes, if you're planning to hold it even more, you could actually potentially hold it until it comes to mitigate 50% of this zone or maybe even 50% of this zone. This is most likely, as I see the market moving, that is what is going to be happening, because if you see the 4-hour time charts, as I said, it'll have to come back to this zone to actually mitigate that zone, either to invite more sellers into the market, which is most likely to happen too, or since, I think most likely that's what's going to happen, because it did have a market shift when you see over here, breakout structure right here. So it might happen. So let's say if it's happening for a sell, then it will come to mitigate the zone. But let's say if the actual strong low was right here, then it's still in the uptrend, means then it might be coming to take out this entire high. That we cannot predict yet. We have to wait for it to happen and see which way direction is going. And after that takes place, that when you get that information, that is when you start planning your trade, right? I'm just telling you how to actually become the proper, successful trader. For that, like, you need to plan your trades like very beautifully. So I'm telling you how to do that. So, but the thing is, regardless whether it's coming to mitigate this for going the sell side or it's mitigating this to lead to a breakout structure, either ways, for you, all that matters is it is going to come to mitigate that zone or not, right? Since you know that's going to happen, so yes, you can target that mitigation zone right here. So you will get a even more higher risk to reward trade, like a 1:10, 1:11 kind of trade, right? But I wouldn't do that, because as per my strategy, what I usually do is I will target for the not for that mitigation zone, because that sometimes it doesn't play out too, because I do not want to, and it takes much more longer before the pullbacks and everything to happen to go back to mitigation. So what I personally find comfortable doing most of the time, what I do is my trading plan is targeting the previous swing high to lead to a break of structure. So that is the trade that I would have taken, I would have entered, and beautiful 1:7 trade you could have actually gotten. So I just explained to you two trades back to back with complete explanation, and just completely purely based on market structure and market mechanics and how exactly smart money plays. And I believe, when you read the charts like a pro like this, and if you're able to get that mindset and discipline, which is what I'm working on, getting that mindset and discipline to actually control your other compulsions and really focus on the perfect trade analysis rather than taking the stupid trades. Once you do this, you win. My previous video, my gold trading video, was just like this, and that was a live trade that I took with complete explanation. If you have seen this, then you can see this trade being played out live, and I got this as well. But now I'm just explaining back testing, and I'm explaining through examples about how to actually take trades. And I hope you enjoyed this video. So we are not exactly taking trades today, rather that does not matter, right? Whether I take a trade or not, that just benefits me. That doesn't benefit you in any way, because my major purpose of the YouTube channel, as I said, is for documenting my journey, yes. But obviously, if I'm doing a public space, if I'm creating a community, then it's not about what money I make. I obviously would like to make money in the way, which I will do. That's for my personal gains. But see, everyone wants to make money, and I'm not. You don't have to apologize. There's nothing to apologize for that, because I'm not selling any courses or anything. But my thing is, like, if entire purpose of this YouTube channel is actually people, most of you who are watching my videos, the traders who are watching my videos, they're here for seeing the analysis and seeing how to, how to basically see how my brain works and how I'm reading the charts and how to actually get more logical make more logical trading decisions in the market. For that, it doesn't matter to you whether I take a trade or not. So obviously what matters to you, like if I'm taking a trade, how would I take it and what exactly the analysis is. And I hope you enjoyed that, and I have tried to put a lot of effort in this video right here in order to explain every single minute detail to the best of my capabilities. As of now, I've tried my best. I hope you really enjoy this video, and I hope you can really support my journey too, because I haven't reached the place that I want to reach yet. So I'm also assuming that the community of the people that who are watching me are also in similar boats as me, or people who are actually completely just maybe starting out. So for those people, probably I hope like you enjoy this video very much and you can understand the logic behind it, and maybe you can see, like, most of the time when I make videos, I'm not able to explain with so much effort, because that is a very hectic process. Making videos like that is very difficult, but in my head, all these thought processes are usually running when I take a trade, and whenever these processes run in my trade, in my head, that is exactly when I win the trade too. That's something that I've noticed. And if I don't put this much effort, most of the time I actually end up losing the trade. Like, I swear to God. Even if I win, I don't feel happy, because I feel like I didn't apply that much effort that I needed to. So it sometimes feels like, maybe you just gambled, and I do not want such money made. Like, I would rather just give it back to the market and, really not give two F's about it, like, genuinely speaking. But yeah, like, anyways, I hope maybe, this community that I'm building here will enjoy these videos, and all of you could, join my journey, and together we can actually get to that successful, profitable trader journey. And I'm very sure that following all these rules and really, believing in that and visualizing that, manifesting that goal will obviously get us to that place sooner than later. I can really feel that we are that far away from that goal, and I can also already see myself making maybe a few weeks, just few weeks down the line, hopefully, maybe max few months, but hopefully a few weeks down the line, I can see myself making a video where I explain about my entire becoming a profitable trader journey. So I'm really visualizing that, and I hope you can also, whatever learnings you have, you can share it with me so that I can try to improvise for myself. And I hope I helped some of you out there with my learnings and my efforts in the market. And again, I hope you all enjoyed today's video, and keep believing in yourself and keep moving forward, and be patient, be really patient, and focus on really craft, becoming best at this craft. Whatever skill that you choose, whether it's whatever, like personally for me is engineering, and now this as well. Whatever is a craft that you choose, try to focus on really mastering that to your best of your capabilities, and you'll get that joy out of it. That joy when you really master something and really like do it in an artwork, like very beautiful way. Like there is certain joy that you will get out of it. So really focus on getting that. Money, everything is just a byproduct. It's secondary. It'll come along the way when you start becoming. When you're really good at something, like eventually the money just starts flowing in without you even having to work for it. Like that will just happen. So forget about all that. Rather focus on really becoming better yourself as a better skilled individual, and keep going at it. And my audience, I hope you once again enjoy the video, and I'll see you all in the next one. Peace.